Now, guys, currently it's around 3:49. You can see today there was a huge sell-off and and a huge buying pressure here as well. After that, further continuation of selling towards the downside in Bank Nifty. You can see in yesterday's mid support level. If you try to put support where exactly market would have taken support, as the market broke this structure, the 50 level here, as well as the 0.38 level to the downside, we could have expected further selling here. But let's break down in crystal clear of what market has done today. These are the moving averages which I use. This is the 200. The green color is the 100. This is yellow color is the 51. 50 moving average is 21, as well as the 9 moving average. You can see yesterday as the market really showed huge bullish momentum. What we expected is that the market would target those sellers who have entered the market and further continue towards the upside. But as per that knowledge itself, the market gapped up and further buying pressure couldn't continue as the market, after gapping up, continued selling. Here you can see that in Bank Nifty, there might be a lot of buyers enter the market. There might be a lot of people who might have entered here, 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 here. These are the market participants who might have entered the market. And seeing at this downward candle, a lot of sellers might have placed their position, expecting market to go further down. But what happened today is that the market targeted all those sellers, and market targeted all these sellers. And what we expected is that the market would gap up like this and retrace to a certain extent and continue further buying. But what happened is that as soon as the market gapped up, it went to yesterday's close level, took support from here, and this pullback. You can see after this huge sell-off towards the downside, you can see this pullback, guys. This is the retracement of the first candle. If you try to plot the fib of the first candle, this is the mid of the first candle. And in a 5-minute time frame, if you try to plot the mid, in a 5-minute time frame, if you try to plot the zone, you can see that this is the 5-minute zone. As in both 1 minute as well as in 5 minutes zone, the market is trading lower than the first candles. You can clearly expect rejection from here and trade downwards. But for confidence, let's add another structure, that is VWAP. So today's VWAP level here. And you can see clearly, guys, from here. This is the mid. This is the 5-minute zone. This is the 200 moving average, the blue color line. Always focus mainly on the 200 moving average as well as the VWAP. And for continuation of the trend, you can focus on the 9 as well as the 21 moving average. Rest the 50 as well as the 100, you can keep it just for reference sake. But here, look at this black line. You can see price retracing at till the level to this black line. This is the VWAP level, and price faced resistance over here. And you can see multiple rejections from this candle. As soon as you saw multiple rejections, you could have entered short position here, expecting keeping your stop loss just above this 5-minute zone or above this bearish candle, and you could have targeted to yesterday's demand zone. So if you see, as this structure is broken, this demand is not being respected. You can target all the way to this demand zone. You can see the last down move before the up move. You could have targeted this demand zone, guys. You can see the price took support and retraced upwards. But what happened actually is that you can even draw the fib retracement level, the common point between this to the common point between this, and you can target the 4.238 level. You can see clearly that the market came all the way to this zone, the 4.283 level. This is the 4.26 level, yeah. And as long as the market traded below the VWAP level as well as 200 moving average, you could have just tried your stop loss. And this is how you could have targeted this impulsive move towards the downside. You could have targeted all the way here. And seeing this price rejection from the 9 moving average, as price couldn't cross the 21 moving average, you could have continued all the way till here. As you can see, after this candle, the 21 moving average got crossed. So for better confluence also, you can look at market. As you see, the market broke this structure towards the downside. This is the breakout structure after this pullback. Usually price would have, if market would have been bullish, the market would have come all the way here, retraced and took support from this pivot level and would have continued further. Again, took support here and head further. This is how the pattern would have worked. But what happened is that after this bullish momentum, these two bullish candle, this is the bullish engulfing candle, as well as followed by another impulsive bullish candle. You can see a lot of buyers might have entered the market looking at these two bullish candles, expecting the further momentum towards the upside. But what happened is that after these two bullish candles, you can see sudden break of structure of this impulsive move towards the downside. And after this momentum, you can see the price couldn't even cross the 50 level of this zone. If you consider this level, it faced resistance over here. This is the 50 level. You can see here. This is the 50 level. You can see as the market faced rejection from this 9 moving average, you can see after this rejection candle, you can see this rejection candle, as well as this retracement. You could have entered the market even at this position also, uh, expecting the market to go further down. From here as well, you could have taken short position, even if you were keeping your stop loss just above this zone as well, and targeting the fib extension levels. If you try to plot the fib extensions level, common point between this, the common point between this, and the common point between this, you could have targeted the 1.618 level. You can see clearly that the market went to 1.618 level, or you could have targeted the 2.618 level, 2.618, or it went all the way to 3.618. You can see clearly that the market came all the way to 3.618 level. This is another trade where you could have taken long position over here, keeping your stop loss. Or if the mark, or if you could have just trialed this as long as market traded below the 9 as well as the 21 moving average, as long as it crosses with a bullish candle like this, or the 21 moving average where it crossed like this, you can see this rejection candle, as well as this retracement. You could have entered the market even at this position also, uh, expecting the market to go further down. From here as well, you could have taken short position, even if you were keeping your stop loss just above this zone as well, and targeting the fib extension levels. If you try to plot the fib extensions level, common point between this, the common point between this, and the common point between this, you could have targeted the 1.618 level. You can see clearly that the market went to 1.618 level, or you could have targeted the 2.618 level, 2.618, or it went all the way to 3.618. You can see clearly that the market came all the way to 3.618 level. This is another trade where you could have taken long position over here, keeping your stop loss. Or if the mark, or if you could have just trialed this as long as market traded below the 9 as well as the 21 moving average, as long as it crosses with a bullish candle like this, or the 21 moving average where it crossed like this, you could have exited your position here. This is how where you could have easily tried your stop loss and targeted huge profits. This is 0.38 level. Any position where you could have taken here, you could have been in profit. And what you can see here is that if you try to plot the anchor VWAP level over here, this is one, and the market came till this zone, guys. This zone is like equivalent to this demand zone yesterday. As you can see clearly, the market couldn't cross this level. And if you try to mark this candle, the large down candle, before this up move, which broke structure towards the downside, you can see clearly there is demand over here, this demand zone. So for time being, let's take it off. And you can see that the market here clearly broke structure towards the upside. And there was a clear demand zone over here. This has a chalk over here. But this demand zone didn't get respected, guys. You can see clearly the last down move before the up move. Price would have come here and rallied towards the upside. You can see clearly as the market broke the structure, it came back, retraced upwards, came here and went higher. But what happened is that this demand got breached out and it broke structure towards the downside. This is because of no fair value gap here, guys. The three impulsive candles when this structure is broken should consist of a fair value gap. But look at this, guys. You can see here the same demand zone which broke this structure towards the upside or this structure towards the upside. You can see this structure which has broken. This is the breakoff structure, or you can call it as the chalk. And with this impulsive candle, guys, has a fair value gap here. You can see clearly that the market has fair value gap over here. And if you try to plot the fib levels, the last down move as well as the up move, you can clear it. This is the common point. And you can see clearly that the price was taking support at the 50 level. This is the 50 level, and this is the fair value gap. So you can see price came here, took support over here. And if you, for confluence, if you try to plot the anchor VWAP level, you can see clearly the price is taking support, multiple rejections from the VWAP level. After seeing this bullish breakout, this structure, you could have easily exited your position. And that is where I have taken my trade, guys. That is where I have taken my trade. You can see I made profit of around 5K today. Uh, and you can see at my orders as well that around at around 11:38. Let's see at around 11:38. Around 11, I bought around at 54 and I sold it at 64. I made a profit of only 10 rupees. Seeing this bullish candle, I exited my position, but I didn't look for this retracement. I should have waited. That is where I have taken my trade. You can see I made profit of around 5K today. Uh, and you can see at my orders as well that around at around 11:38. Let's see at around 11:38. Around 11, I bought around at 54 and I sold it at 64. I made a profit of only 10 rupees. Seeing this bullish candle, I exited my position, but I didn't look for this retracement. I should have waited for this trade to continue further, but I thought this bullish momentum would continue further, but this retracement, I couldn't hold the position. And you can see clearly, guys, here, the market broke this structure, took retracement from the 50 level and further continued towards the buying. And if you try to draw the common point between here, here, as well as here, you can see clearly that the market went all the way to 4.26 level. And for further continuation of the trade, you could have the common point between this to this. And you can see clearly that the market came all the way to this 3.618 level. Or you can see the last up candle before the down move, as the market couldn't even cross the pivot level over here and it faced resistance and came down. This is one setup where you could have easily taken your position, keeping your stop loss over here. You could have kept your stop loss at a very low level till this zone, and you could have targeted till the pivot level. This is where you could have targeted your positions. And after this pivot level, the market retraced back here. You can see here it's a very good retracement. But if you try to plot the fib levels from the last down candle over here to the last up candle, you can see clearly the price taking support as you have seen yesterday's also. And it is 0.38 level. And the market continued further buying. If the market would have been bullish price, the market broke this structure, took support from the 0.38 level or the 50 level of this anchor VWAP, and continued further buying. But what happened is that the market sentiment really changed after this last sell-off candle. And how can we know that this is the last sell-off candle? If you try to plot the fib extension levels, the common point between this is the common point between here and the common point between this and the common point between this level, you can see clearly that the zero point 0.5 and the zero point 0.6 zone is there, guys. This is the zone where there is a lot of profit booking. So whenever the market after this bullish momentum towards the upside, and when price retraces, usually the market, if it's not too bullish, there would be uh, halt in price after it reaches the zero point 0.5 and zero point 0.6 zone. And this is where the market on this retracement uh, after this bullish candle, another piercing candle formed and further piercing candle, this bullish momentum and continue to further downwards momentum towards the downside. And if you see the market broke this structure low, clearly indicating there is a formation of chalk over here. And if you try to plot the Fib extension levels over here, you can see clearly as the market here clearly broke this low. This is one chalk. And if you try to plot anchor VWAP level at this zone and the Fib level over here, the as you can see, both are black. So you can consider the swings over here, and you can see this zone over here. This is the 50 level, and this is where you could have entered short position, or else after this rejection, as the market traded below the 9 moving average, and these two up candles looks like trendline liquidity. You can see after this liquidity is being breached out, you could have taken short position over here. And as long as the market crossed the 9 as well as 21 moving average, you could have traded towards the downside. But what I expected the position is that this common point between this, the common point between this and here, the common point between this, you can see the market came all the way to this zone, 2.618 level. Or you could have targeted, or you could have targeted this fair value gap, 2.618, or you could have targeted this fair value gap, guys. This is the fair value gap where you can see initially bullish momentum towards the upside. And this is where you could have targeted this position. Or after this bearish candle, price took support at 100 moving average, but couldn't cross the 200 moving average over here. And again, it continued further selling as it doesn't cross even the 9 as well as the 21 moving average here, indicating that the market is bearish, guys. You can see clearly support over here, resistance couldn't cross the 9 as well as 21 moving average, as well as VWAP resistance. If you try to take this out, and if you try to take this out as well, this anchor VWAP are just for confluence, guys. Here you can see you could have even taken short position over here, keeping your stop loss just below this and targeting all the way to this zone. This is one good setup where you could have targeted it. And here you can see if you try to plot the anchor VWAP level over here, you can see after the market took this liquidity below and the market continued to rally upwards. And clearly you can see this down structure, we broke structure towards the upside. Here clearly it broke this structure. This is the chalk over here. And this is the demand which actually broke structure towards the upside. And this we can consider it to be as 1 minute order block. And what you can see here is that this is the last swing down move. And after it broke this structure, the price came and filled this void. You can see this liquidity, guys, the fair value gap over here, the common, this and this zone, this impulsive candle towards the upside, this fair value gap has been filled. So you can see the market retraced again, it faced rejection over here. And you can see after this inside candle between this and this bullish engulfing candle of this candle, and you can see the market rallied upwards. And you can see that after this retracement, after this impulsive move, the market retraced, but it faced multiple rejections from this anchor VWAP level as well as the 21, as well as the 9 moving average. After this momentum candle, you could have entered long position, targeting the fib of retracement. You can you could have easily targeted the fib of this retracement. Like if you consider the common point between here and the common point between here, you can see clearly this is the fib 50 level. This is the fib 50 level. You could have easily targeted till this 0.5 level, fib 50 level over here. This is one confluence where you could have taken long position over here with keeping your stop loss just below this zone and targeting up to 50 level. Or you could have even targeted the 200 moving average as well. And you can see clearly again price came, took support after seeing this bullish engulfing candle from this 1 minute order block. You could even have entered long position over here, keeping your stop loss below this candle and targeting the 200 moving average. This is one good setup where you could have easily gained decent amount of profit. And what you can see is that price after touching 200 moving average faced multiple rejections. You can see price here it faced rejection, here it faced rejection, here it faced rejection, here it faced rejection. Here it even didn't able to cross and suddenly impulsive selling towards the downside. And the last up move before the down move which broke structure towards the downside is this candle. This is the last up move which broke structure towards the downside. And if you try to plot the 1 minute order block of this candle, this is the 1 minute order block. You can see clearly the price broke the structure, retraced back again. It came again. It retraced back down again. Finally, it touched the order block, and you can see after this selling pressure began. And if you try to plot the fib extensions level, the common point between this, the common point between this, and the common point between this, you can easily target the 1.618 level. You can see clearly you could have gone all the way to 1.618 after this bearish candle. You could have easily exited your long position, or you can see any of these demand zone as well. And you can short position or keeping your stop loss just above this pip and targeting all the way to this level. This is another good risk to reward ratio where you could have exited your position once if the price on this retracement crossing this 200 moving average. This is another good setup, guys. See, there are like 1, 2, 3, 4, 5, 6, 7 good setups. As today was market was very volatile, and as today was Sensex expiry, you could have easily traded all these positions, guys, with keeping your stop loss just minimum. And looking at premium charts also, I will try to explain you like at around 9:20. Let's look at premium charts as well. You can see clearly that the market faced resistance here, the 200 moving average. This is Bank Nifty spot chart. This is the call premium and this is the put premium. Here you can see clearly that the market here, this is out of the call option. If you try to add the in the money call option, you can see good premium moves over here. If you try to add like let's see in the money call options, put options. Here you can see clearly as here it's the premium over here is 400 and here also the premium is like 400 itself. And if you see this 200 moving average, the price faced multiple rejections over here. Here also the price couldn't cross this 200 moving average as well as the VWAP rejection towards the downside. And all this confluence denying the VWAP, the 21, the 100 and the 200 moving averages are in confluence. Here you can see clearly the market uh, gone down here. It went all the way to 320 and finally rallied upwards and price took support from this VWAP as well as the 9 as well as the uh, 200 moving average. The price couldn't cross these levels. You could have easily entered long position keeping your stop loss just below this pip and you could have targeted this pivot point or this R1 level or you could have tried your stop loss all the way to this zone, guys. As long as it crosses the 21 moving average, you can see clearly it's 21 moving average was not crossed. Here it clearly crossed. So you could have targeted all the way to this zone from 390 to all the way to 680 points, guys. This is one good setup where you could have taken. And here you can see clearly this down impulsive momentum towards the downside. This also, the RSI also you can see clear impulsive momentum towards the downside. And this retracement towards the upside, here also there was a good retracement. And here you can see clearly in C side also this momentum towards the upside clearly breaking this structure towards the downside. And you can see clearly the price is forming support over here. You can see this support over here as it did very bullish. Market remained very bullish over here. You can see here also as this broke and price trading above the 9 as well, the 50% of the RSI showing clearly bullish momentum. You could have entered long position here and targeting all the way to the 100 as 200 as well as the VWAP level over here. You can see clearly this is the trade which I have placed here. This RSI momentum out towards the upside, price consolidating above the 50% of RSI, keeping your stop loss just below this and targeting all the way towards the upside. This is another good setup where you could have taken long position over here. And after this further continuation of selling, you can see buying pressures over here. And here also you can see after this bullish momentum towards upside, the price came all the way and you can see price breaking this structure towards the downside as well. After here you can see price taking support. Here you can see price consolidating, took support from 100. Here price took support from 200 moving average and broke towards the upside. Here this 100 moving average support broke towards the downside, clearly signifying that the 200 moving average is a strong momentum candle, momentum moving average, as well as the VWAP level was also just below this. You could have even taken the trade, keeping your stop loss just below the VWAP level and targeting this swing high structure. There is another like 100 to 200 points of profit over here. This is how you could have taken long position over here as well. And this is this trade. And coming to at around, this is quite random, but 1249. If you look at 1249 towards the long position, you can see clearly that the market here, you can see RSI momentum, price gaining momentum towards the upside. And in the same zone here, you can see clearly the momentum is lower and there is decay of momentum towards the downside. You could have kept your stop loss just below this pip and targeting all the way to 200 moving average. This is one good setup where you could have targeted or else selling this position all the way to 200 moving average. And you can see another demand zone, this momentum as well. And here you can see at around 230, at around at around 230, you can see clearly that the market broke this structure towards the upside. And this demand zone, this 1 minute order block, market came and this 1 minute order block also is 200 moving average point over here. You can see the 1 minute order block at the spot chart as well as the you can see this impulsive momentum candle here, this impulsive momentum candle, this 1 minute order block to this zone over here, this 200 moving average. You can could have easily kept your stop loss just below this 200 moving average and targeting all the way to this high also. You can see another good risk to reward ratio where you could have gained a decent amount of profit over here as well. This is one good setup where you could have targeted this. And if you want further confluences of this trade, you could have kept like this swing structure, or you could have kept it the last up move. You can see clearly the price couldn't, or this zone. You can see here it couldn't cross this level, or you could have kept all the way to this level also. You can see clearly the price is facing resistance. Here it faces resistance, here also it will face resistance and try to head lower only. This is about Bank Nifty, guys. Now coming to Nifty 50. Nifty 50, as today is Sensex expiry, I will show Nifty 50 in reference to Sensex, as both Sensex and Nifty always tries to move in same direction. You can see clearly that in Nifty 50 that if you try to add out of the money, go to options over here. Let's put like any out of the money. Okay, you can see this premium also, it's like 103 at the opening. Here you can see it's around 86. So both premiums are almost same. You can see clearly that here the market is like moving between this range. This wide pivot range is there. The market is trying to move to between these zones. But in Nifty, you can see, let's break down each and everything in Nifty. Nifty, if you're coming to the first candle fib structure, you can, while plotting the fib of the first candle, you can see clearly, you will plot fib of the first candle, and 5 minute zone as well. So if you come to 5 minute time frame also, let's mark the 5 minute zone as well. As this is towards the downside, we shall put from here to here. So you can see clearly this is the 5 minute time zone. And as we mark 5 minute zone. And now it's coming to 1 minute time frame. Sorry. As you can see, yesterday's bullish momentum towards the upside. The market targeted all those sellers who might have sold here, expecting the market to go in further. Market initiated all those sellers stop losses, as well as after seeing gap up, a lot of buyers also might enter the market, expecting the market to go further upwards. As today is Sensex expiry, you should always keep in mind that there is a lot of manipulation going around in market. And you can see after this rejection of this candle, the market price rejection from the 9 as well as the 21 moving average, the market tried to head up. But what happened is that the market, again, with the impulsive bearish candle, broke structure towards the downside and further continuation of selling took place. And you can see clearly here. And if you try to plot the anchor VWAP level over here, you can see that the market, what we could have be expected is that the market here, as market came, took support from the 21 moving average and tried to head high, you could have seen the market taking support and further entering high and continuing further buying pressure. But this bearish candle, which engulfed 1, 2, 3, 4 candles here, clearly signifying that the market is totally bearish, as well as the 9 as well as the 21 moving average also broken towards the downside. But looking at the put premiums, guys, here you can see clearly in Sensex, as you can see clearly here, this impulsive candle, there was not much momentum, even though this candle clearly broke all these moving averages towards the downside. But here you can see that this premium didn't move as much. Clearly, the market moving sideways. So the premium movement was not in confluence with this mm, with uh, with this momentum. So guys, look at this. The market went all the way from here to here, but here it went and moved sideways and continued further momentum towards the downside. And the premium movements are totally different, guys, in Sensex. Uh, and you can see price rejection from this 162 level. Here you can see, as well as this pivot level. This is R1 level, rejection of price, as well as the 200 moving average, as well as the 100 moving average. Price buyers were not able to hold this position and see multiple rejections. But here you can input premium, you can clearly see that the market tried to head high, consolidated, took support from VWAP, broke the structure towards the upside. Again, consolidation after this impulsive candle, took support from the 9 as well as 100 moving average, again broke structure. Again, the market went higher. You can see the premium movements from 75 to all the way to 275. Again, the market came down, took support from the 200 moving average over here. You can see at this 950, at around 950, you can see this is the 950. You can see clearly after this bearish break of structure towards the downside. This is the break of structure towards the downside. And the last up move before it broke structure towards the downside, if you mark this bearish candle, this is a 1 minute order block, guys. And order blocks are always respected only one. So once if order block is getting respected, and that's it, guys. And if you try to even put the anchor VWAP level at the order block level, this is the last up move. You can see clearly that the market was not able to cross this level. Or if you try to plot the anchor VWAP level at this impulsive bearish candle, you can see clearly that the market face resistance over here, face resistance over here, and this is 1 minute order block. You can see clearly, guys, here, these two candles trying to initiate buyers to enter the market. Here they faced another bearish engulfing candle, which engulfed the previous candle. And this is also engulfing candle. You can see further retracement towards the order block and further continuation of selling here. And if you try to plot the fib extension levels, keeping the common point between this common point between this and the common point between this. You can see you could have targeted all the way to 4.21 level. Look at this, guys. Look at this. You could have targeted all the way to 4.26 level. And keeping your stop loss limited, start position, and keeping a stop loss just above VWAP or less as in zone, you could have targeted all the way to 4.26 level. You could have 5x, 10x your capital by this time. And you can see after this level, the price took multiple supports over here. And here you can see clearly in premium chart that the market took at around 949. Here you can see rejection from the 21 as well as the 9 moving average. The price continued further. It took support at around 200 moving average and continues buying pressure over here. You see the market buying pressure went all the way till 740 from 120 to 720. It's almost like 7x or 8x, guys. You could have 7x to your amount. Means if you have invested 100 rupees, it would have become 700 rupees. And you can see another trade over here. You can see multiple demand zones over here as market is retesting this demand zone. And after this momentum candle, you can see, and this retracement, you can see, RSI also, there was a huge momentum towards the upside with this impulsive candle towards the upside. At the same time, even in Bank Nifty, as I showed you earlier, at this time zone at 11:31, there impulsive momentum and consolidation of price. This is at around 9:30. And if you see the same timing at Nifty also, the same timing at 11:30, this momentum towards the upside and the price consolidating. Here you can see clearly after this retracement, you can see in this retracement, the price is taking, couldn't cross this 50% of the RSI. You can see clearly this retracement towards the downside, but here it formed lower low. But here this retracement though didn't form lower low, guys. You can see clearly that there is momentum. You can see clearly when this broke structure towards the downside, it broke the 50% of the RSI, and this retracement towards the upside, you can see clearly it couldn't even cross this 9 as well as the 21 moving average, where here it closed, it went below this level, but here in the RSI momentum, bias momentum was not decayed. Here also you can see clearly that this momentum has not been decayed, and after this you can see clearly a huge bullish momentum towards the upside, guys. You can see the price went from 40 all the way to 280, guys. This is what, if you have a good intuitions of how the market's gonna move, and this is where I exited my position, guys. Like I took the position at around here, at around like 40 or something, and I exited at 63. And after seeing this rejection, I thought that further selling would have happened, but what I thought is was false. You can see clearly that the market went all the way above here. Here I missed out, guys. I exited around 11:42. If you see at 11:42, I exited at 64. What I should have done is that I could have holded on to my position, seeing I exited at 64, guys, and it went all the way to 44 again. I could have kept my stop loss here or break even, and you could see clearly this momentum. I could have done 7x or 5x my capital, but it's fine, guys. This happens as long as your capital is preserved. There is no issue for you. And this is one good setup where you could have taken the long position over here. And if you try to draw the fib extinction levels, the common point between this, the common point between this, and the common point between this, you could have targeted all the way to 4.18 level or the pivot level. Or here it went all the way to this fair value gap, guys. You can see in Nifty it went all the way to this fair value gap, this zone, the last up move before the down. So here is where the market kind of went here and tried to hold. And if you try to plot the last down move before the up move, you can see clearly that the market here also took support from the 0.38 level. Here is where the market took support as well as the moving average support. And if you try to plot the fib extinction levels, the common point between this, the common point between this, and the common point between this, or here it's like the blue as well as or this. You can see clearly that 0.5 level also has not been crossed over here. It after this bullish candle, usually price would after this candle, the price would take support from here or the anywhere between the moving average or any support and further continuation of buying. This is how the market, if the market sentiment was bullish, could have continued further. But what happened actually is that the market here, after this last sell-off candle, found another bearish engulfing candle, clearly signifying that the market is trend is gonna change. And another confluence with this is this trend line liquidity over here. And if you try to plot this anchor VWAP level over here and as well as the fib levels over here, you can draw the fib level. This is the fib 50 level. And if you see where to target the common point between this, the common point between this, you can see clearly, guys. Here also the market came all the way to 4.26 level. You can see clearly that the market, you could have easily entered short position over here, keeping your stop loss just above this zone and targeting towards the downside all the way here, guys, all the way to here. This is where you could have targeted short position all the way to here, the 4.26 level or this demand zone. Or you could have just tried your stop loss as long as you see this bullish candle breaking the 9 as well as the 21 moving average towards the upside. This is another trade where you could have taken long position, short position over here. And if you try to exit this and delete this as well, you can see clearly after this momentum, the price consolidated sideways. This is quite random. But here also you could have taken this short position saying this support, this trend line liquidity after this break of this candle towards the downside to, but just keep it as for simple. Let's keep it as simple. But here what you can see is that the market here broke this phase resistance over here, broke the structure towards the downside. If you try to plot the anchor rewrap level over here, here you can see clearly the market facing resistance over here. You can see the last up move. And after this impulsive momentum towards the downside, this engulfing candle, if you try to plot the fib levels over here, the market couldn't cross this zone. This is the fib 50 level. The market couldn't cross this zone. And you can see further continuation of price towards the downside. Here you could have actually doubled your premium over here. And again, the market retraced back to this level, seeing this momentum. And if you try to plot the anchor way up level, this upward momentum, again, the market reached all the way here to this fair value gap, again, price rejection. Or you could have seen another break of structure towards the downside here. This is one break of structure. And if you try to plot the last up move before the down move, this is the last up move. And you can see clearly that the market even couldn't cross this level, the 0.38 level, clearly signifying that the market is bearish. It broke structure here. And if you consider the last up move here, this is the last up move, and you can see clearly, or if you consider this one, you can see clearly that the price facing rejection over here. And if you try to plot the fib extension levels, the common point between this, the common point between this, and the common point between this, you could have targeted all the way to the 100% or the 1.618 level, guys. This is where you could have again doubled or 10x to your capital over here. This is the 1.618 level, where you could have taken short position, keeping your stop loss just above this candle and targeting all the way to the 100 or on the 1.618 level. Or another short position is here, keeping your stop loss above this candle and targeting all the way to 100% level over here. If you try to plot the common point between this, the common point between this, And the common point written this, you can see clearly the 100% level over here. This is where you could have targeted. This is one good setup, and this momentum towards upside was quite random, where you can see clearly the market broke this 200 moving average, and further continuation of buying didn't take place, followed by another equal size engulfing pattern, breaking the structure towards the downside, and further selling pressure towards the downside happened. And this retracement, though, you can easily predict, as you can see after this zone, this upward momentum, you can see after this zone, the market couldn't cross further, and further selling pressure occurred. This kind of 1 minute order block. You can see this is one structure where you could have easily traded. But let's look at into premium charts, guys. Here in premium momentum, as I've explained you here, the market consolidated here. During this time, you can see the RSI taking support, and here it's like the multiple demand zones over here, and you could have targeted all the way here. And after this, also after this rejection of price here, the trendline liquidity 50 levels at around 1203. At around 1203, you see here as the market here, the trendline liquidity over here, this one confluence, or you could have kept your stop loss just below this pip or this impulsive candle and targeted towards the upside. This is one good setup where you could have easily taken long position, keeping your stop loss just below this candle or below this low and targeting this high as well. This is quite unexpected, but it's better to trade in this way only, guys. And another setup is at around 146. At around 146, you can see clearly around 140. You can see clearly that after the market retraced here, this retracement and market trying to sell off from here. But here you can see clearly, guys, this 1 minute order block at around 131. At around 131, you can see at around 131 here, this impulsive candle momentum towards the downside, as well as anchor review support resistance over here, keeping your stop loss just above this point and targeting all the way. And if you had targeted this long position, keeping your stop loss just below this anchor wave level, they could have gone all the way from 400 all the way to 1100. It's almost like 5x, 2x, guys, to 3x. Yeah, this is one good setup where you could have taken long position. Um, it's better to take trades based on risk to reward ratio. As long as your risk is limited, keep your stop loss tight because not all your trades are gonna be a win trades. So capital preservation is the most important thing. Risk management is the most important thing. As long as you have capital, you can play the game of trading. So please try to protect your capital and take trades based on risk to reward ratio or just trial your stop losses as long as you're running in profits. And if you're losing, take just the stop losses, guys. Don't just trial your stop losses, expecting that the in a hope that the market would be in your favor. That's never gonna happen, guys. So to trade stress free, it's always better to trade based to risk to reward ratio. Know your risk, how much you're gonna risk your amount. Only then you need to take your trade. And with confluences, you better take positions. And I hope my knowledge where I'm trading and how I trade um, will be helpful for you guys. This is how I actually trade. It's quite different from how most of the YouTubers there who show their profits. But I am trading totally in a different way. I think uh, my validity of how I trade. I think in future a lot of people will accept how I trade, and I think there is a lot of scope in how I trade, guys. So please encourage and share your comments down below, guys. Thank you.